Good morning from the NASDAQ market site in Times Square. I'm John Marino for The Street, wishing you a happy Friday, November 8th. Going into the trading day, it's a global markets hangover from the big Twitter IPO. U.S. futures are looking slightly up, but internationally, markets have slipped. And for more on the global trading day, we are joined by Laura Board, who is in the Deal's London newsroom with more. Laura?
Morning, John. We've had a fair share of excitement this week in Europe, and today European indices are down, with the CAC 40 in Paris faring the worst among the major ones, after Standard & Poor's cut France's sovereign debt ratings by one notch to AA. Yesterday, of course, there was a flurry of excitement after the ECB unexpectedly cut rates. There was a brief rally. Today, things have moved backwards. The CAC 40 down more than 1%. The FTSE and the DAX also down. In Asia, the Hang Seng was down 0.6%, the Nikkei down 1%. Chinese export figures in October came in much better than expected. Quite reassuringly, they rebounded sharply from a surprise drop in September, but Asian stocks across the board pretty much down. In Europe, the stampede of private equity-backed IPOs has continued. We've had some good results here from the IPO of Numericable, a Carlyle and Cinven-backed French cable company, which is trading really well on its debut after pricing at the top of the range. Blackstone and CVC's Merlin Entertainments, the owner of the London Eye and the Madame Tussauds Waxwork, is also doing really well on its debut here in London after pricing near the top of the range to raise about 1.5 billion and to value the company at about 3.2 billion pounds. Back to you, John.
Thank you very much, Laura. That's Laura Board in the Deal's London newsroom. Back here in New York and back at our NASDAQ board, shares of Twitter shot up on the first day of trading in its IPO. They priced Wednesday night at $26 a share, and Twitter stock opened at $45.10 on its first trade. By the end of the day, the micro-messaging network was worth $24.46 billion. And at one point, Twitter stock broke the $50 a share mark, settling at $44.90, or up 72% when the closing bell rang yesterday. Heading into the open today, Twitter stock is looking up once again. Back to our wall here, Tesla shares took a thumping again on Thursday, and it is not looking any better heading into the trading day today, down about 3% so far. However, one Deutsche Bank analyst is very bullish on the stock with a 12-month price target of $200 a share. This prediction is coming on expectations that the company will boost production up to 220,000 vehicles by the end of this decade, as well as advantages that Tesla has in supertrain and powered charger technology. Right now, the stock is off, though, heading into the open. And this morning, shares of Facebook are looking up slightly, and that's good news. But however, Twitter's smooth sailing IPO must have been cause for Mark Zuckerberg to cringe a little bit, and social media investors rebalancing their portfolio yesterday might have been even more painful for him. Facebook shares there slipping 3%. Zuck wasn't alone. Shares of Zynga fell more than 6%. Shares of LinkedIn dropped more than 4%. This morning, Zynga shares are looking up for nearly a point, and LinkedIn is treading water before the open. Rounding out today's top stocks is one of our picks from Jim Cramer, Procter & Gamble. He's a buyer of Procter & Gamble yet again, this coming from our Action Alerts Plus at the Street. Jim is bullish on the stock, saying that their quarterly boost of 4% in organic growth is a positive, and he likes their long-term focus on expansion. So far this year, P&G is up more than 21%. And that's it for us today, folks. But be sure to keep track of our breaking news today at the Street and our analysis all day. Be back here Monday morning for the Global Markets Report. I'm John Marino. Have a great day.